Hey everybody, Roger Grubb here.
And I'm Clyde Bryant.
All right, so today we're talking about something really exciting, something that we haven't seen in about a year and a half to 2 years. So what I'm talking about is the rates for the 5-year fixed rate mortgages. They've gone below 3%, and this is great timing because we're approaching the start of the summer real estate market, and it's starting to heat up. Got some great news last week from the April real estate report. We posted a video on that. So now this is actually going to help in terms of generating momentum for this for the market. Why that's important, now that you take over in a second, is that for a first-time home buyer who's weighing the choice between a fixed and a variable, the choice became a little bit more clear. You're able to take a little bit more risk out of the decision making because they're essentially the same rate, right? And rather than having to worry about fluctuations in variable rates, you can take a fixed rate for the 5-year period, and that helps in terms of managing or mitigating some of the risk and managing your monthly payment.
Yeah, so because previously what we were seeing was with the discounts on the variable rates being what they were, most people were leaning towards a variable rate mortgage and obtaining pretty good rates, anywhere between we were seeing prime less 80, prime less 60, in and around there in terms of rate.
Well, on a purchase, I've seen up to prime minus 1.
Prime minus 1 on the purchase, yeah, that's right.
Prime minus 1.2, so that's...
Yeah, and now if you're able to obtain that 5-year fix at $299, you're really able to have that locked in rate and be able to plan for the future. So now you have that guaranteed rate, that guaranteed payment that you can work around for the next 5 years, right?
So even though it's a great opportunity, it's a great time to look at the fixed rate mortgage because of the pricing being below 3%. Not all fixed rate mortgages are the same because you often got to take into account the penalties for breaking them, and that's what we've always in the past recommended variables, but because of the flexibility in terms of the penalties. But now with the rates being low, you also bear that in mind, and also depending on, and also keeping in mind the lenders and what the penalty situation is with the various lenders. So
yeah, so I guess to just simplify that, what we're trying to say is some lenders will put you into these really great 5-year products, but you're not able to exit unless you have a bona fide sale, or it's we've seen some really crazy ones in the past. I won't mention any names, but it might be 2 or 3%, or was it 2%? Yeah, like almost 3% that you had to pay, excuse me, in order to exit. Which those numbers are they can be astronomical depending on the size of your mortgage. So it's very important to understand the terms and conditions of that mortgage product that you're locking yourself into, in order to ensure that it's the right product for you. And this is where, of course, we come in.
Yeah. Always remember, we work for you, not the bank, so we have your best interest at heart. If you have any questions or concerns, or just need some advice, opinion with respect to fixed or variable or any other mortgage related question, by all means feel free to reach out to Clyde and myself. Main Street Mortgages,
Keeping you informed.